Hey everyone, welcome back to Corporate Decoder, the place where we break down what corporate giants are really saying in their filings. And let me tell you, Interactive Strength has been busy lately, maybe a little too busy trying to keep its head above water. Alright, so what we have here is what's called a Form 8K, which is basically a report for big events that happen with a company between their regular quarterly or annual reports. Think of it like a company's public diary entry for really important stuff. This report is dated August 26, 2025, and it's all about something called a material definitive agreement and the creation of a new financial obligation. Fancy words for them making a deal that really matters and taking on new debt, basically. Now, Interactive Strength trades on the NASDAQ under the ticker TRNR. They seem to be a company that's issuing a lot of new stock and warrants, which are like options to buy stock later. They're also calling themselves an emerging growth company. This means they're relatively new and get to follow some lighter reporting rules for a while. It also means they might be more volatile and risky, but with potential for big growth. The main news here happened back in January of 2025 when Interactive Strength made a deal with an investor to sell them some securities, and now they're telling us about how that deal is evolving. So back in January, they had a securities purchase agreement and sold what they call Class A incremental warrants. These warrants give the investor the right to buy more of the company's stuff. Specifically, these warrants were for things like senior secured convertible notes, totaling $13 million. Convertible notes are like loans that can be turned into stock later. And they also got rights to buy warrants to purchase common stock, which is just regular ownership in the company. The number of shares they could buy was adjusted because of a 1-for-10 reverse stock split. Then in March, the investor used some of those warrants to buy more of those convertible notes for $4 million. And when they did that, they got even more warrants to buy common stock, this time for about 82,988 shares. Fast forward to July, and the investor did it again, this time buying $3 million worth of notes and getting warrants for over 300,000 shares. Now, the big news for this report is that on August 26, 2025, the investor exercised even more of these warrants, this time for $290,000 worth of the convertible notes. And as a result of this latest exercise, they were issued Class A incremental common warrants to buy over 31,000 more shares of common stock. Let's look at the details of these new notes. Their maturity date, or when they have to be paid back, is August 26, 2028, so 3 years from now. These notes are convertible into shares of common stock, but with a twist. The conversion price is $5 a 135 Taiwan third share, but it's calculated based on 110% of the principal amount plus accrued interest and other fees. This means if the investor converts the notes, they'll likely get slightly more money back in stock value than the loan amount itself, which is generous. Now, for the warrants that give them the right to buy common stock, they can be exercised for shares at a price of $7.89 per share. These warrants are good for a long time, from August 2025 all the way until August 2032. That's a 7-year window. There's a cap on how much stock the investor can own as a result of these conversions or exercises. They can't own more than 4.99% or, at their option, 9.99% of the company's outstanding shares after the conversion or exercise. This is a common way for companies to prevent any single investor from gaining too much control. In March, the shareholders approved issuing a significant number of shares. To cover these note conversions and warrant exercises, they approved up to over 10 million shares for note conversions and over 600,000 for warrant exercises. This shows a clear intention to dilute existing shareholders to satisfy these agreements. This next section simply confirms that the company has indeed taken on a new financial obligation, which is these convertible notes we just talked about. And this section is about how they sold these securities. They are saying these sales were exempt from needing to be registered with the government, which usually happens when you sell to accredited investors or through specific exemptions. They specifically mention the investor is an accredited investor, which means they are considered financially sophisticated enough to invest in these kinds of deals without the same level of government protection as a typical retail investor. And finally, we have the signatures. The Chief Financial Officer signed off on this report on August 27, 2025, confirming all this information. Now let's look at the bigger picture here. Interactive Strength Inc. is actively using convertible debt and warrants to fund its operations or expansion. This is common for growth companies, but it comes with risks, especially when multiple tranches of warrants and notes are issued. The fact that the investor is repeatedly exercising their warrants to buy more notes and then getting more warrants to buy stock suggests they believe in the company's future or see a lucrative opportunity in converting these securities to stock. However, each time they exercise warrants and convert notes, it means more shares of common stock will be issued. This can dilute the ownership percentage of existing shareholders. If the company's stock price doesn't rise sufficiently to offset the increased number of shares outstanding, the value of each individual share could decrease. The exercise price for the common stock warrants is $7.89, while the conversion price for the notes is around $5.35. The fact that the investor is converting notes into stock at a lower price basis. The warrants at a higher price might be more of a longer-term play or contingent on the stock reaching those higher levels. A key thing to watch is how effectively Interactive Strength uses the capital it's raising through these deals. Are they investing in products growing their customer base or improving their technology? The success of these funding rounds hinges on actual business performance. If the company can't translate this funding into solid growth and profitability, the dilution from these convertible instruments could become a significant problem for shareholders. We don't have specific financial tables in this particular 8K, but the story it tells is one of active financing through complex instruments. It's a sign that the company likely needs capital to operate or grow and is using these methods to get it. The repeated exercise of these warrants shows a strong commitment from this particular investor, but it also signals a potentially significant increase in the company's share count in the near future. So what's my take on this? Interactive Strength is in a phase where it's raising money by issuing new equity and debt that can turn into equity. This is a high-risk, high-reward situation. The investor seems to be betting heavily on the company's future growth. For existing shareholders, it's crucial to monitor if this influx of cash translates into real operational success and whether the expected growth justifies the dilution. If the company stumbles, the increasing share count could severely impact the stock price. Alright, that's our breakdown of Interactive Strength's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.